Brotherhood from sea to shining sea.
Aloha mai kako. You are watching Hawaii Political Reporter.
Aloha. Tonight, part 3 of our economic series. You will see an excellent report by Press TV that provides a snapshot of worldwide economic conditions and the interconnections and ramifications of deteriorating economies worldwide. Here in Hawaii, we have the largest debt burden of any state. Over $83,000 of state debt and over $141,000 of federal debt for each working person in the state, and a federal liability of over $1 million per taxpayer. We also have the highest credit card debt and the highest mortgage debt, with an economy that is struggling. This does not bode well and will demand that we and our representatives get our heads out of the sand and deal with this, or the economy will fail drastically, the jobless rate will rise much higher, prices and crime will skyrocket, and life will be miserable. But we needn't fail. There are ways, systemically, that are not too difficult to fix this system. Although economy and more prudent spending is certainly desirable, we're not talking about austerity and deep job cuts, nor are we talking about crippling tax that will burden those already struggling, nor are we talking about borrowing, essentially stealing from those who will never be able to repay, nor are we talking about the miracles of the growing the economy, which would be ideal, but is not going to happen immediately, certainly with the regulatory burdens that we have. There is another way, and it is fundamental. It's reform of the monetary system, and we will be getting into that much more in the next couple of days. Now to Press TV's excellent coverage of the deteriorating worldwide economic situation and the fiscal cliff that is about to occur in the United States. Afterwards, we will return with a preview of tomorrow's show, but first, a word from an honest man.
America today is no longer the land of the free and the home of the brave. It is the land of government spying, snooping, and scrutinizing American citizens without their knowledge. It is a land where you can be arrested without charges and detained indefinitely without a phone call or a trial. This is the land Republicans and Democrats built. The America of Barack Obama and the America of Mitt Romney. The people now running America have a different idea of freedom than the people who founded it. Gary Johnson wants a different America. He wants an America without the wars, the taxes, the spending, the lousy economy, the joblessness, and failed programs like the war on drugs. Gary Johnson wants what we all want. He wants our America back. If you think Gary Johnson is dreaming for thinking we can live in peace, prosperity, and freedom again, Gary Johnson says, dream a little.
My name is Gary Johnson. Be libertarian with me for one election. Live free.
Hello and welcome to Press TV News Analysis. I'm Kaveh Taghvai. The economic and monetary union of Europe is under threat. Member countries like Spain, Italy, Greece, and France are yet to control their debt levels, even though austerity-ridden budget cuts have been introduced. Yet the Eurozone debt crisis is about to experience another blow. A looming crisis in the U.S. known as the fiscal cliff, which is threatening to plunge the U.S. economy back into recession. How badly will that affect the Eurozone countries? Couple that with a slowdown in global economic growth, like in China, and a return to a global financial crisis does not seem too far. In this news analysis, we'll focus on the depth of the Eurozone debt crisis, but also the contagion effects of the ailing economies around the world.
The worsening economic situation in the single currency bloc remains a main concern for most Europeans. The latest data shows that major economies are once again contracting, despite harsh austerity measures imposed to reduce public debt. Official data for September shows that the private sector has also seen a downturn, raising fears of a double-dip recession in the third quarter. Precautionary measures taken by governments and private businesses to reduce debt have so far led to massive job losses, tax hikes, and a slash in salaries and pensions over the past years. But the same seems to be repeating itself as governments opt for harsher measures and private businesses resort to more layoffs. A recent announcement by France's pharmaceuticals giant Sanofi has sparked massive protests in Paris. The company plans to slash nearly 1,000 jobs as part of its restructuring plan. Other struggling French brands, including Peugeot Citroën, have also announced cuts in the coming year. Anger is also growing in debt-ridden Greece as the government discusses details of a 2-year austerity package with international lenders. Cyclists and municipal workers gathered outside Parliament to protest further cuts, which will affect pensions, benefits, and salaries of civil servants.
Poverty, destitution, layoff, a collapse of municipalities. We are ready to clash. We will not allow them to take away our right to a future with hope.
Greece is under immense pressure from the European Commission, European Central Bank and the International Monetary Fund to slash over 13 billion euros in spending over the next 2 years in return for more bailout loans. Protests against the Italian government's fiscal policies are also growing louder. Public transport workers in major Italian cities walked off their jobs to protest Rome's failure to renew their contracts. The spotlight's also on an Italian businessman who climbs the St. Peter's Basilica in the Vatican. It's Marcello De Finizio's second day on top of the dome, and he's calling on the Italian government to stop imposing more austerity measures.
We are here to show our solidarity to the man who has done this action, putting his own life at risk to emphasize a problem that he shares with another 30,000 entrepreneurs. He wants to bring this problem to the attention of politicians who have been ignoring it so far.
Similar rallies have also rocked Spain as Madrid struggles to reduce its debt and cope with soaring borrowing costs. Protesters there accuse the government of mishandling the crisis and dragging the nation into misery. The latest data from Europe shows that the number of unemployed people in the Eurobloc surpassed 18 million in August. But experts say the figure can soon go beyond 19 million as business confidence drops and companies lose their ability to create jobs.
A lot of fires to be put out there. Let's find out what our guests think about this ailing economy in the Eurozone and maybe around the world. Let me introduce some author of Bank to the Future. Simon Dixon joins us from London. We have senior fellow at the Independent Institute, Ivan Eland, who joins us from Washington. The Secretary General of CP Foundation, Paolo Raffona, who joins us from Brussels. Gentlemen, welcome. Simon Dixon, perhaps I could run this news analysis just based on this most recent statement just hours ago. And that comes from the IMF chief economist, Olivier Blanchard. He has said the world economic crisis could take 10 years to run its course. Your reaction?
Well, it certainly could take 10 years to run its course if we continue with the solutions and the types of things that we're looking at right now, because we're still not addressing many of the root causes of the issues. We seem to be choosing to kick the can further down the road, refinance, creative finance, new products in order to bail out countries from other countries that are in distress situations. So my real opinion is that it could take longer than 10 years if we don't actually continue this. We've already lost half a decade. We're headed for a decade more. But what we need to do is address the major issues which the governments just aren't simply looking at right now. They're trying to solve it with austerity measures. They're trying to increase debt. And those are two solutions which aren't going to help right now.
Tell us one major issue. We know it's easy to impose austerity cuts. We know it's easy to cut down budgets. But just one thing that you think, in your opinion, Simon Dixon, that they should have addressed or they could address that will at least help the problem.
Yes, so well, the two major problems which come side by side and two solutions is, firstly, they need to address the fact that almost all money in the current environment is created as debt. And not only is it created as debt, but all debt seems to make its way into speculation, into banking bailouts, into increasing property prices, into consumer debt, but it's not making its way into businesses which can take that debt and actually create jobs and create actual real growth from it. And what the economy needs is not growth. It's not debt. It's growth. It's actual jobs.
Okay. Moving on, Paolo Raffone, since this statement is coming from the IMF chief economist, let's look at these financial institutions. One financial publication, I found it pretty interesting, and I'm going to quote, has said, the course currently pursued by the German governments and the ECB are really quite remarkable in its anti-democratic, anti-social, and even anti-economic, that is to say, ineffective character. What does that mean?
Well, it means basically that the economy has lost its social role. And this is the problem that we are facing today, because the economy has been moved into a sort of a financial sphere that is above the governments, above the people, above anything else but for itself.
Well,
and, what the austerity measures are doing is to try to save this castle of paper, basically forgetting that if the fundamentals are not good, the entire castle will crumble. And there is nothing to add. I mean, the situation in the world is showing that we are heading towards a diversification with at least two areas in the east of the West that are being created. One around Russia and probably Iran, and the other one around China. So the world will be pretty different in a couple of years, and things will be brought to the table, and maybe there would be an agreement where the West can find its place, but in a relative way to the others.
But what is driving the West and Europe in general? Ivan Eland, let's look at the various bailout deals and, for example, from the ECB demands, such as the ones that were imposed on Italy, as an example. They require not simply deficit reduction and understandable requirements, obviously, for a loan, but specific action on unrelated policies. We could mention privatization. We could mention wage cuts or labor market liberalization. How much control, then, in retrospect, are these respective governments giving up in exchange for these loans?
Well, there are requirements, but I mean, these countries should be doing that in the first place. They should be doing it without the intervention of outside bodies. And in the long term, if we want to get over this, we need to get rid of this debt of all the countries, and they need to not be bailed out. They need to face the consequences of their actions, because when we give people negative reinforcement, and that is what it would be, they won't do some of these things again. Governments cause this problem, and we're expecting governments to behave well to get out of it, and it just won't happen. What the debt burden is crushing, and that's what's causing the problem. And they're going to have a 10-year crisis if they don't, have drastic austerity measures. And they may have temporary recessions and that sort of thing. But after that, their economies will get better. People just don't want to endure any pain at all, and they've let their governments get themselves into this problem. And the people themselves are at fault as well in many of these countries, and including the U.S., I would argue that.
Well, why don't you tell us why in the U.S.?
Beg your pardon?
You mentioned the U.S. What about the U.S.? Who's at fault there?
Well, I think it's the same situation as in Europe. We have a crushing debt, and the politicians aren't doing anything about it. The politicians just seem to think that we can keep spending it this way. And the Republican Party here just wants to cut taxes, but they don't want to cut spending, and that's a big problem. Then the Democrats don't want to cut spending at all, so certainly not very much. So we need drastic austerity measures in all of these countries. And yes, you will have an economic contraction until the market clears and we go back to reality. We have a lot of bailing out and that sort of thing, and it's not going to solve the problem. It's the same problem. You have to have austerity measures, you're going to have recessions, and you have to clear the decks. Otherwise, you're going to have a Japan-like situation that drags on for decades.
And you have Japan in the meantime, Simon Dixon, blaming Europe, based on the upcoming meeting that's going to be held there, of not being able to handle the debt crisis. But Simon Dixon keeps coming back to this debt. However, the reduction of debt is not happening. I mean, we have Eurozone countries continuing to pile on more debt. We could talk about recent data showing that France's national debt, for example, has risen to 91% of its GDP. Spain's debt to GDP ratio also is set to rise to 85.3%. Why do these countries continue to pile on debt and at the same time risk a social upheaval, to say the least, by the austerity cuts, by the budget cuts that affect people's pensions, to say the least?
What you have to remember is that we're in a system where essentially all money is debt. Every penny in existence comes from debt. There's a tiny percentage of money which is cash and coins, but almost all money is essentially debt. It's created into existence when a loan is issued. And so in order to grow the economy and continue the Ponzi scheme, I guess you could call it, you have two choices in the economy that we live in today. If you want more money, you have to have more debt. And if you want less debt, then you have to have less money. So we're in this scenario where there's no win-win because money is created as debt. So therefore, in order to continue the economy, if the consumers are all maxed out on their credit cards, then companies have to max out their credit cards. And when companies can't max out their credit cards and consumers can't max out their credit cards, then the government steps in. And they don't really have a choice in the existing environment. So we're faced with an unfair solution today, because if we did leave it to pan out and pay off their debt, you'd end up with this massive shrinkage of the money supply and an absolute disaster. So either way, you can't implement either of those solutions of austerity or governments taking on the debt without a corresponding reform in the fundamental structure of how we get money to our people and how money is created.
Paul Rafone, there is this sentiment out there that well, the government has stepped in from the year 2007, late 2008, when the financial crisis hit, with the billions and billions in stimulus, whether it's from Europe or, of course, the United States. But it is said that the banks are holding this money. They're not lending it out to the, for example, to the businesses. They're sitting on loads of cash. Do you agree with that? What are they doing with that money? Why are they not lending it out, if it's true?
Well, the money is being printed, particularly in the United States, but in Europe too it has started and is being done with a different formula, but it's the same result. And it is done exclusively to maintain the banking system, not to restart the economy. The economy is made by people, not by banks. And the economy is made by producers and by producers and by consumers. So if this money doesn't reach these people, the economy gets to a halt, and we reach a strange situation where financially things can continue, but economically they're completely on hold. And this is where we are heading to in good parts of Europe now.
Well, I mean, for the economy to improve, there's got to be some stimulus that's been given, at least now in the hands of the bank, to be handed down to the average person. I mean, let's be honest here, Paolo Rafone. This debt is the idea of capitalism that's been accrued over the years, of which it seems like now people don't have their 5, 6, 7 credit cards. Obviously, the housing crisis also led to some people going bankrupt. So are we saying that there was a bubble of debt that people created, and now they don't have that anymore, which is why we're seeing the slowdown in different markets and different economies, I should say, for example, around the Eurozone?
It is not to be ascribed to the responsibility of individuals. This is the entire system that is based, as my colleagues were saying, on the debt creation to inflate the growth. So the myth of the growth, a permanent growth, this is something that has to be addressed. we need the growth, but in a reasonable, limited, achievable, and sustainable way.
Not in the way that has been pursued, especially since the 1980s, which is totally artificial, and this is the result. So we are in an artificial system.
Okay, Ivan Ilyand, I'd like to talk to you about this fiscal cliff in the U.S. I'm sure you've heard about it. Come January, it is said taxes are going to be raised by $536 billion roughly by next year, dealing a financial blow, it is said, and I found this interesting, to nearly 90% of U.S. families. Do you agree that obviously that's going to affect consumer buying, which may in turn, as a consequence, obviously affect Europe in turn?
Well, I think it probably will, but I think the drastic effects that are predicted are probably overstated. What we really do need to do is cut spending in this country. The problem with this fiscal cliff is it also raises taxes, so it will reduce the deficit dramatically, but what we have is artificial prosperity, which is being goosed by government. Obama tried to do it with a stimulus, but it's like pushing on a string. It's the same problem that the Japanese have had for decades now, and we can't do that anymore. We have to cut spending in this country, and I'm not for tax cuts until we get the spending down. The Republicans always have fake tax cuts, which means you cut taxes to win votes, but you don't cut the spending because that will lose votes. And so you get a big deficit, as in Reagan, and an even bigger deficit was created by George W. Bush and has been continued by Obama. And I think we need to get the spending down some way, and we can't cut taxes like the Republicans want to, like Paul Ryan wants to, until we get the spending down. And we really need to work on that. And it's tough politically here in the United States, just like it's tough in Greece and Spain and in Europe and in almost any country. When the government is giving people subsidies in any country, they need to, that needs to stop, unfortunately. And people don't like it. That's why they go protest in the streets. But government roles have to be pared down of the employees. Government programs have to be cut. Nobody likes to do that. But we've led an artificially prosperous life in many of the Western countries and in other countries as well around the world. And I think it needs to stop.
Well, are we looking at another scenario where you're going to have this squabbling going on between the Democrats and Republicans? We saw last time it was down to the 90th minute, if not longer, where the debt ceiling at the end was risen. Is this what we're looking at in terms of this financial cliff that's supposed to come by the end of December?
Well, I think there'll be the usual game of chicken between the two parties. And what you'll eventually see, hopefully they'll get some sort of a settlement. But even if the fiscal cliff falls over, I don't think the country's going to go into disaster. I think they're going to have to cut even more from the budget to get the deficit down. But they'll also, unfortunately, be raising taxes. I think the fiscal cliff will slow the economy, if not throw it into a recession. But I think it may be necessary to get to work on the national debt and the deficits that we have. So, people are worried about government services, but I would worry more about the temporary recession effect here. But I think in the long term, if you get down spending, we've had this happen in the United States before in the 1920s and in the late 1950s, where they cut the budget and the economy spurted in growth because the debt was reduced. And I think that's what we've got to do now.
And of course, we want to look at short-term, Simon Dixon. That's on one side of the coin. But I rather find this alarming, and it's not highlighted. And that was the report by the World Bank, which says hundreds of millions of new jobs will be needed to keep up with world population growth just by the year 2020. And it said, in continuation, the global economic crisis poses this challenge to that goal, as some 200 million people will remain unemployed, including 75 million under the age of 25. So we do have a global economic crisis on our hands for years to come.
Yeah, well, we haven't changed. Nothing's actually changed since since it all came to light in 2007. we've had these temporary calm moments where we've been reliant upon quantitative easing, or we've had new currencies by the IMF like special drawing rights, or we've had temporary moments where countries have done some creative finance which doesn't make any sense, but we haven't changed any of the fundamentals. And there's only two things that we need to create. We need to create more jobs for people and more businesses to employ those people. And until we start addressing that we need to get money and it can't come from government necessarily, it has to come from banks and the private sector. And we have to remember that since we've been in this recession, that's the sector that has been cut off from all the finance, from private sector finance, from banking. And that's the only sector that can get us out. We need real growth, we need real jobs. And as the World Bank correctly points out, it doesn't look like we're going to be able to achieve any of those targets. In fact, we won't be able to achieve any of those targets with the existing policies that we're implementing right now.
And finally, Paolo Raffone, the Group of 7 Finance Chiefs meeting is going to be held at the annual IMF and World Bank gatherings in Tokyo. What are they going to talk about that they haven't talked about before? Especially given the fact that you have the IMF chief economist coming out saying for 10 years the euro, I guess the Eurozone countries are going to be dealing with this dismal economic crisis that they have on their hands.
But I do not expect much out of that meeting. Probably they are trying also to come closer to the area where a new agreement can be found, because, well, Japan is a declining country like Europe and like the United States. It's enough to have a tour in Asia and you will see a striking difference between Tokyo and Shanghai. And it's enough to understand where money is going and where innovation is being created. So the problem is that all these Western economies are oversized and incapable to adapt to the new needs. From the monetary point of view, there is no possibility to maintain the supremacy of the Western currencies, which are uniting in the IMF, and it's necessary to open it up into a world agreement, probably a new world order, as someone was saying in the past, but has to be created on new basis, which cannot be that of imposing a system to all the others.
Okay, we'll have to leave it there. Thank you very much. Let me thank our guest, author of Bank to the Future, Simon Dixon from London, Senior Fellow at Independent Institute, Ivan Elin from Washington, and you were just listening to Paolo Raffone. He's a general of the SIPI Foundation from Brussels. Thank you for watching another edition of the Press TV News Analysis. Do send us any questions, comments, suggestions. Newsroom@presstv.ir is our email address. From me, Kaveh Taghvai, and the entire team here in the capital, Tehran, it's goodbye.
This is not a partisan issue. Unbiased analysis will show that both parties are to blame, both parties are fiscally irresponsible, and neither are forthright. In addition, we citizens are often economically illiterate and demand more of our representatives than is possible for them to deliver. Do you know that the U.S. government does not really control the money supply in this country? Every dollar created, we pay interest on. The government does not create the money.
So where does legal tender come from? It comes from the central bank of the nation. Some central banks are privately owned. Some are owned by the public. Both supply the legal tender of the nation by printing up paper cash for the cost of the printing and then using that cash to buy interest-bearing national debt at face value.
In our nation's history, we have thrown off central banks 5 times with great prosperity ensuing each time. Tomorrow we will talk about central banks and their role in the monetary system and inflation. On Friday, we will delve into the monetary system itself, and you will understand how the system is designed to fail on a regular basis and how those at the top of the banking system skim off it and cause ruin for those of us below.
I find that Bernanke is the greatest counterfeiter in the history of the world. He has created new dollars out of thin air more than anybody else, and we happen to have the reserve currency of the world. So I don't see him as being a savior. He's the participant, and he is a counterfeiter. There should be a picture on Time magazine with him flying a helicopter, pushing out money. Congressman, he's known for saying that he's helicopter banned.
In 1913, the money power of the country was taken away from the people, but it was given up in the Federal Reserve Act. The Federal Reserve is no more federal than Federal Express.
You try a hide and destroy a freedom, man. You sick agenda. We know you anti-American. You come forward American Constitution. 1913, corrupt in the system. Devalue dollar, hyperinflation. The Federal Reserve, controlled by Lucifer. He can see you lying.